What's up, kid? How are you doing today?
I'm good, Drew. How are you?
Dude, I'm doing fantastic. This week has been good. It's been a nice week, and I'm looking forward to NGRN on Friday. It's going to be really awesome.
Yeah, who is our guest speaker on Friday?
We have Chad Casper from Pillar to Post, the Casper team. So I'm very excited. Just a little brief, introduction about him. He's a man that doesn't need one, but I'm going to give it to him anyways. He is a franchise owner of a home inspection company, and he's grown it to be one of the largest players in Southern Arizona. So it'll be very interesting to hear how he did that and sort of just a little bit from him and what he can share with us. So I'm excited.
Yeah. He, like you said, he's become quickly one of the best, and biggest. And, his goal is to move into Phoenix after he dominates Tucson. So, even the whole Pillar to Post franchise, from what, he said when they had their, award ceremony, all the top dog franchise owners said that he's going to be the biggest one of them all, just, with time. So, he's awesome, super cool guy, super personable, really down to earth, and so he'll be willing to share all his tips and tricks for how he grew. So excited for that. But Drew,
Very
why don't
excited.
you lead us off with your stock updates?
Absolutely, absolutely. So last week was a fairly good week for all the indexes as a whole. S&P 500 was up 2.35% last week, raising their year to date up 15.31%. So great year return this year. Russell 2000 was up a half a percent, making their year to date total up 7.12%. Again, pretty great return. And then even the Dow Jones has had a really nice recovery. They stayed stagnant throughout the beginning of the year, but they're up 1.16% or 3.51 year to date. Now, again, I always preach this. These numbers, they are big, they are nice. However, that is after a significant decline. So a lot of these stocks are still underpriced and still great deals. The S&P 500 looks fantastic because there are a couple stocks like Nvidia, for example, that are up substantially and they drive that market price way up. And so, making sure that you are still buying in, still actively doing your day-to-day disciplines, making a habit out of it and not stopping because you think it's going to get too hot and not starting, don't wait to start now. Still buy while there are still deals. But other than that, that's my update, man. How about yourself?
Yeah, so I am going to go kind of over the hot topic of this, weekly update, and that is commercial real estate. So I made a video last week where Elon Musk had tweeted that commercial real estate is crashing this year and the residential market is next. And so, of course, Elon Musk, one of the most brightest and brilliant people, walking the earth today, one of the most successful as well. And so that begs the question, is he right or wrong? And I think personally that he's right in a lot of his assumptions. When we look at commercial real estate over the past couple of years, you had many people who were getting into the commercial real estate market, over leveraging themselves with these assets, hoping and banking their whole plan on appreciation. And as we've seen over the past few months and this year, that appreciation has come to a pretty hard halt, right? So every graph of pricing and appreciation, everything has just gone stagnant. And so a lot of these guys who have, bought into this stuff, they now have these notes and these debt structures that are going to be coming due in the next couple of years. And the appreciation is not there. Their cash flow is not there, and they're going to have to foreclose. And it's going to really create a lot of unique buying opportunities for those, investors who are liquid. So if you talk to any big entrepreneurs or big, real estate guys, a lot of them are just stockpiling cash right now, and they're not buying unless it's just a stellar deal because they believe, similar to Elon, that, the commercial real estate market, will start to tank. Now, I think it's important that, to understand that in commercial real estate, there are different sectors, there's different classes. So you have industrial, you have office, you have retail, you have multifamily. And so each topic really has its, pros and cons to it and are affected kind of differently, right? So office space, as an example, during COVID, was really hurting because no one was in the office. Everyone was at home. So that sector hurt quite a bit. Whereas in industrial right now is absolutely booming, right? The industrial market, you have all these big tech companies growing and expanding because everyone's ordering online and working from online. So, the automotive industry is booming, so they need to make more chips and all this. Due to COVID, we had a lot of deficiencies, right? So industrial is booming incredibly. Multifamily over the past couple of years was insanely hot, right? It seems like anytime you visited Phoenix, there was an apartment getting built every way you turned, and it's still that way. So, there are different sectors when it comes to commercial, and I think ultimately office is going to be hurting quite a bit, moving forward. But at least in my space, what I've seen is a lot of people over leveraging the multifamily space. And so I've actually heard of stories where guys were buying 2 to 3% cap rate buildings, which cap rate is just your cash on cash return if you paid cash for the property. So they were buying these 3% cap rate deals and they were borrowing at a 7 to 8% rate. So, and these loans were due within 2-year time or even a 1-year time frame. So these guys are literally buying these massive deals, super expensive debt based on what the property is generating in return. And their hope and plan was just to bank on appreciation, that because the market was skyrocketing and appreciating so much, they were going to be able to just turn around, slap some paint on it and sell the thing and then make their money back. Well, that's not the case, as we've seen this year. So commercial real estate could be heading, for, quite a bit of a hurting period, but ultimately that just creates buying opportunities for the people that actually know what they're doing. So just word of advice, the call to action, make sure you're being super conservative. Make sure that if you are going to be getting into commercial real estate or investing in real estate, that you talk to numerous people who have done it successfully, and you talk to people who've, failed at it. Right? Because you want to know both sides. What should I look for? What makes a good deal? How do I know that, I'm not going to be one of these people who's negatively leveraged and, I'm screwed in 2 years? What I can say and what I've learned personally is that if you can get fixed rate debt and you can cash flow day one on the property, you will be fine long term. Because if I can fix my debt the minute I buy it and I can cash flow the minute I buy it, that's how I never lose it, because the property is always going to be generating cash. So for these guys, right, they're just banking on appreciation and hoping that the market continues to go up. They were negatively cash flowing day one, and that's how you lose real estate. So just call to action. Make sure you guys are, looking out for that kind of stuff and you're networking with the right people who know what they're doing. Otherwise, I'll quickly go over kind of the Tucson residential market. Right now, the average sales price for May of 2023 was $329,150. And that is up from $329,000 from April. Okay, so just $150 increase. As far as homes for sale, we are starting to see a plateau in homes for sale. So in April of 2023, it was 1,821 homes for sale, and now we're at 8,000 or 1,827. So we've seen a 6-home increase month over month. And if you could look at the graph, it's kind of increased and now it's starting to just plateau a little bit. Okay, so we're seeing, that slow down to where, I personally believe it's buyer activity. Buyer activity is still super hot. So as these homes actively came on the market, buyers are coming to them and it's taking them off the market just as it was a couple of years ago. So we're going to start seeing that homes for sale just start to plateau, if not drop. Because like I said, there's still a lot of buyers out there that want homes. As far as supply and demand goes, there's not enough supply out there for the demand of buyers that I'm seeing. So that's why the numbers are reflecting that. And then as far as the days on market, we are seeing an increase of 2 days month over month. So homes are sitting on the market a little bit longer. And then as far as month supply, we've stayed the same month over month at 1.8 month supply in Tucson. So again, month supply means that if no other homes came on the market, it would take 1.8 months from now for all of the homes on the market to sell. So that's still a pretty hot market. And it looks like it's going to be staying that way throughout the rest of the summer, because statistically that's the hottest time of the year. It's 40% more active than the rest of the year. So if anyone, has clients who are looking to buy, or they themselves are looking to buy, I think we're in for a pretty strong residential market throughout Southern Arizona for sure.
I love that. I love that. And I agree. And honestly, going back to your other point, I kind of want to hit on like, it's reflecting in stock prices too. So for those of you who don't know, there are these things called REITs, they're real estate investment trusts. And basically what they are the investors that Kate is talking about, but on a much larger scale. I mean, they're buying billions of dollars worth of properties across the country, and then they have all these analysts that work underneath, and they're traded publicly, so you don't have to buy in at 50,000 like the typical minimum buy-in is for a smaller organization that's looking to buy, but you can buy in with maybe $10-15, and that's you're just buying a share proportionally on the stock market, and that trades publicly. And there are some rules between that and how it works, but essentially there is a group in there, Simon Property Group, and they own a ton of malls throughout the West Coast and even across into the East Coast, and their stock price has reflected exactly that. And typically stock prices are leading indicators, so they're a 12-month indicator before what's actually happening currently in the economy, and then real estate is typically a lagging indicator, so it's a follow-up 12 months after what's happening in the current economy. And we saw it, skyrocket into 2016, plummet during COVID, and then skyrocket back to the end of 2021. And so now fast forward a year on that, we're looking at like the beginning of 2023. And I agree, I kind of see that kind of commercial real estate market a little bit hurting. So
Yeah, that's crazy. And I think, correct me if I'm wrong, but it would make sense as to the stock market moves quicker, just due to the fact that
absolutely,
it's a much more liquid investment, right? Like,
absolutely,
you can't just like sell, a real estate property, within like 10 minutes, right? So it's like, so
absolutely.
that I never thought of it that way, but that's actually a really good point to keep an eye on stocks, because that kind of forecasts what's going to happen.
Exactly, because it is a steering of a ship, right? And if they're the analysts, again, tracking and everything, and then they are selling these REITs to other people like us, these retail investors. They're selling information or are spitting out information for institutional investors, these big companies, and so they have to project forecasts. They have to designate a specific amount of percentage growth and how much they think where the market's going. And so if you read those 10K, 10Q, I mean, they say very similar things to, what you're saying and what other professionals are saying. So definitely I agree with your call to action, like 1,000%. And I'm seeing it on my end too.
Yeah. And I think it doesn't mean to stop buying deals. Like
For sure.
I'm still trying to buy deals, but just be smart about how you're buying the deal, right? Make sure first and foremost you're buying in a market that's, actively growing. There's a lot of job growth, population growth. The income is growing in that market. And then make sure that the property you are buying you are fixing the debt on it, and you are, you're not getting into these, 1 to 2 year, bridge loans, short-term debt bull crap, because you're going to screw yourself. Make sure you are locking in long-term debt, and you are cash flowing day one with that long-term debt. That's the best way to protect yourself by investing in real estate. If COVID happens again, or there's an apocalypse and all your tenants leave, or there's a rental moratorium, like you can't really guard yourself against that. But what you can do is you can fix your variables. You can fix your debt product, and you can fix your cash flow. Make sure that it's making money day one. Unless you're paying cash, and then if you're paying cash, just call me and we'll put stuff together. Call me and Jerome.
That's it. That's it. Oh, I love it. I love it, man. Well, dude, do you have a quote for today?
Dude, I do not have a quote. Do you? I think that's one
I
thing
was,
I forgot to do.
yeah, I'm ill prepared today. Ill prepared. Well, so what I'll say is I like what you just said about fixing your variables. And I think that, that can be kind of a wide, spread thing to all aspects of life, fixing your variables in real estate, making sure that, you're controlling as much as you can, but still understanding that there are things that happen outside of your control. But then also, applying that to your business, your personal. I had a long conversation with a buddy of mine who's actually pretty active in NGRN, and we were talking about, those people who do the core, which is, if you're not familiar with the core, it's a training program that a lot of real estate agents and lenders that want to be successful use. And, we were talking and just discussing very, loosely about how it's the people who are the most successful in the core oftentimes have strained home lives. And it's because they throw 100% of themselves into business. And there's nothing wrong with that. If that's their decision, that's their choice. But again, like for me, I want to have a very well balanced life. I want to have family time. I want to have kid time. I want to have my own play time, but I also want to be successful. It's, fixing your variables and really taking a good look at your time and where you're allocating your time. So that way you're not wasting it, because it's a precious thing, but
Yeah,
you
for
are
sure.
allocating it appropriately. So I
Yeah,
guess that would be
I love it. Yeah, I
that would
mean,
be
and heading into summer, we all got vacations planned. So make sure you're taking that, time off to get away from it for a while, hang out with the family. Like I know both going to be gone, not, this week, but the following. So that's a good call to action too. Make sure you guys are getting, whether it's a hike
recharge.
on the weekend or, going on vacation, whatever it is, make sure you're getting that time that you need.
Man. Well, sweet dude. Well, again, this Friday, Chad Casper, really excited. I'm excited to see how this goes, how this turnout is, and yeah, man, I'm excited to see you and everybody else there.
Likewise, brother. We'll see you then.
All right, talk soon, my friend.
All right. Peace.